Yeah, all right. Another intraday video. So we had some news out. GDP numbers were good. Initial jobless claims. Well, anyway, news is news. Technically, looking at the market, starting with the S&P, we have another move up. This is kind of high of day at the moment. It looks like we're going for that old high S&P. Let's call it 444. I don't think we're going to get there. Let's see. But so far, technically, look, broke out of here, reached an intra. I think we topped out here 444 mainly because of the Nasdaq. But anyway, we'll get to that in a second. And then what did we do? We came all the way back down, retested breakout, and back up we go. Technically, just textbook stuff. Will we get there? I don't know. I think we'll fail. And when we fail, we come back down here, flush this, and then we start to test the ascending, the more long-term strategically important ascending, which is generally weaker, right? For me, the ascending pattern is the weakest one. Just like breaking out of the ascending is the best pattern to play. So I am actually bearish this entire move up, but that's what's happening at the moment based on the news as a catalyst, but it's always technicals that for me have to be respected. And there's the news has a funny way of intertwining with technicals. Looking at the Nasdaq, not as strong, which is funny because the Nasdaq has been leading the way up. So maybe we're just exhausted. We're still exhausted with the tech stocks. Nvidia played a very nice short with Nvidia, covered at 406 and 401, then we shorted at 418. Now we're at 411. I think we're going to go all the way back down. I'm looking to cover in the three. Well, I've got several tranches to cover, but anyway, that's something else. 390, 380, and then even 367 or something. And even looking for the gap at 320 for Nvidia, just by the way. But I think the tech stocks will be weaker and they will just help, fail this move up. And then we break this little neckline here. Let's call it 357.5. And then back down, we go to the next level. The levels have all been drawn, nothing to draw here. I would just readjust this to the old high, but that's it. So, it's just the S&P that's up and not up by much. Who knows? You could even close red in the S&P. Dow Jones, very green. And by the way, the news, it just increases the chances of more rate hikes. And I've always thought more rate hikes are coming. I don't know how many, but 25 basis points sounds fair for the next one. So even though the Fed announced a pause, which was expected, I still think more Fed rate, I don't know, 2, 3, 4, maybe 25 basis points until the system breaks, and then I don't know how much they will drop. I don't think they'll cut too much. That'll be seen later. But for now, the markets are moving up overall, despite rate hikes being priced in, more rate hikes, which is a bit surprising. I know GDP was good and therefore the market goes up because it's good news, but sometimes it can go any which way. But the Dow Jones very strong, up almost 1%. But again, I don't think we're going to get all the way up here. So I think we will fail. And then it's all about this support. This, by the way, I can delete because the old high is the high to test. Pretty much coincides with this high over here, 34,750-ish. So we'll see if it gets all the way up there. I don't think we will. The Russell, very strong actually for the Russell. It's been very, very weak. It's been the weakest one, and right now it's the strongest one. Will we get all the way up here? I would say no, but actually we were quite close, so it will only take another green day for that. But I think all the markets will fail. Maybe the Russell will make it. I don't know, but I just don't see. Yeah, I see the S&P and the Nasdaq just failing, and then it starts to become a bit more wobbly. Once you start testing this ascending, that's the point. And the Russell will just follow the others. So maybe we touch here, maybe we even venture higher. Do we close above 189.25 or whatever the high is? No. So it's all about this line down here for me, the 180, especially close below 180. So let's see what happens. But for me, so far, we retraced, and I think it looks best in the S&P. Actually, we retraced the move. Now we're going back up. I just think we're going to fail this. I don't see us closing above here, and therefore it'll retest here and it closed below. I think the rest is history. Because that will pretty much coincide with losing this ascending. So those are the patterns I'm watching in the general markets. The banks, the XLF is very strong. So it's just copying pretty much the Russell, I would say. So let's see if we can close up here. I just think the banks will follow the market. So maybe the banks will lead the markets lower. I'm waiting for another regional bank to go down because with these rate increases, we'll go check out their interest rates in a second. But remember, it was the rate increases that led the whole banking crisis. So don't get fooled by this little, pathetic 10% move. Once everything starts to collapse, all of this, when you zoom out, looks like no movement at all. So for now, it's a decent day. Let's see. Maybe the Russell and the banks look okay, pretty strong move. Maybe they will test their highs, at least test their recent highs. I don't know about closing above. I don't know about continuing, but we have trend lines for that just in case. But overall, medium term and definitely long term, I see it going lower. KBE, look at this. This is interesting. It's the senior banks that are leading the way up, whereas the more regional banks, that's pretty weak. So, and it's, the regional banks, the KBE and the KI that have led the disastrous moves when they have had an influence on the market. So I actually wouldn't look to the XLF too much. It's more the weakness in the K. And yeah, they're up 2%, which is okay. It's just in the grand scheme of things, they retraced a bit too much, and I did expect a small bounce around here, and this is it. And maybe this is all it is. And then we go back down. So watch out for the low close below the recent low. So down here, KBE will be down there, 34.5 or whatever. So I'm looking for a flush. I'm looking for a failure to test this and then a flush in the banks and in the big markets, and therefore the Russell and the Dow. So that's that. Now let's look at the most important sector for months. And today is an exceptionally important day. And to be honest, this is what I've been saying. I've been saying watch a 5.3 close in the 1 year, which is what we had. And look what we've got since then. Bam, bam. Again, a funny way of technicals knowing, leading or coinciding with news. And now we've got a total breakout. Now it can reverse and blah, blah, blah. You never know what's going to happen. But right now, and I'm sure it will close like this, to be honest, nice move. Plus, it's justified. It's on GDP news, and therefore the Fed is more likely to raise rates. I don't see why that will change between now and the close unless we have some surprise news. So with the rates going up, and look, the 1 year is hitting new highs. Everything else follows. Look at the 2 year. I said 5%. We're going to get there. That doesn't look too far away, does it? Next week. And look, last time we got up here. So, and to be honest, as the 2 year goes, the Fed goes. So the Fed's going to have to follow the 2 year. It likes to follow market expectations more than anything else. It doesn't like to surprise the market too much. And if the market is pricing in more Fed rate increases, then so be it. And that'll probably lead to destruction of the markets, of the banking, of the financial structure. So I think the same thing will repeat. We'll go all the way up here. Maybe not straight away. Maybe we make new highs. I don't know. Maybe it's just before. But as we go up, this move is expected. But, not a dumping of, it's a buying of bonds. But why? Because there's a stress. There's some sort of failure. I know they had some banking stress test, but who believes that? The point is the system will break. So everything else follows. 5 year up, 10 year up. Look at that. We just touched that trend line. Also coincides with the horizontal high. Maybe next week we close above it and run towards 4%. 4%, nice psychological number. The 30 year, which is the weakest one, heading back up. Let's see if that wants to test and close above 4%. And if we do, we start running up here. That'll be a slow move, and there'll probably be some crash before then. And look at the others. EU, and I said this the other day when it was just hanging around just below my ascending. I said, yeah, I don't trust that. Normally I would say, oh, it's lost, it goes down. I said, no, I don't believe that. The pattern is too strong. You can give it a bit of leeway. So there you go. I just did that. But for me, we're going to move higher, make new highs. The EU is probably worse than the US. I don't know. It's just a pathetic competition of which one's worse in terms of debt. But rates are going up, and the system will crash. What was that news I read about the Bundesbank's losses are just so bad that it needs to be bailed out? It's just so pathetic. One building bails out the other building next door. What a joke. And the Italians, the French, is all the same thing. The British heading back up to new highs. Look at this crisis that was caused from, the pension. Yeah, I forgot there are so many crises, but pension needed bailing out basically when it got all the way up here, and we're just I don't know, 5 business days away from it breaching the same level. It's all about interest rates. And as they go up, the banks, the financial markets, the tech stocks, or whatever, will get absolutely butchered. It'll just take one little domino, and who knows, it could even be tonight. But yeah, very, very, this is the most important asset to watch. Okay, with that said, let's look at the dollar, which tends to move with interest rates up, not too much, up. This is also pretty close to well, on the upside for me, you've got these two trend lines really, but it's this descending one that it needs to break out of. So, and look, I said you needed a couple of days. That's why I didn't believe the initial move, but we've had a few digestive moves, and now with news, I think you can now start to believe that this move up will be the one where we start to test this area 104, 104.5. And then you have to be really careful. You could have a little fake out. But how does it, what you really want to see is like a 105, a close at 105. Then you're intersecting with this descending. It's all coalescing here. So watch out, 105.5, this area here, there'll be a bit of resistance, but it's also a bit of a breakout zone. But either way, you start to close above 105.5, 106 definitely. It's just boom, up we go. Up we go, Zoom out, we're talking about 111, this zone. And then maybe it fails and comes back down, but watch out for this 104. Once we reach 104, it's time to pay closer attention to the DXY. But for me, we're moving up with interest rates. Let's see what happens. We're probably 2-3 business days away from a 104 test. Maybe tomorrow, Friday. I don't know. Probably next week. Tomorrow we could touch it, but close below 104. But watch out. If it fails, which to be honest, I doubt, because of interest rates being so strong, so pronounced, and what happened to the 1 year. If we do fail, then it's time to look below. But look how tight this is getting. There will be a decision soon. And to be honest, you have to admit the bias is to the upside. So watch out, commodities. Speaking of, let's go to commodities. Starting with copper. Where are we? Okay, copper. Yeah, so I thought this little ascending would be support, which to be honest, it was just for the day. But with today's move, it has to go lower because of the dollar. But it hasn't gone down that much, let's be honest. I would call this a bit of a sideways down day, but nothing too spectacular. I think you just need to wait until 104 to see what happens. Because if the dollar goes to 104 and then sort of fails, then maybe copper is just going to curl around here. Maybe it goes a little lower down here and then back up. But if the dollar breaks out, we could just start to see a close, below 3.5 and go lower. Long-term copper is great, absolutely great. Some would say even better than gold and silver, but kind of a nothing day, We're basically testing the lows of yesterday, but it's not that bad. So if we look elsewhere, green, natural gas, and I've said this before, it sort of trades in its own world. It doesn't really care about the dollar, interest rates, markets, geopolitics, yes, but I think I look at this a bit more separately than all the other elements to the market. And what's it doing? Well, it's just bouncing off a bit of a level here. This descending broke out of it, retested it, and now probably just going to hover sideways, go up, go to 3, and then squeeze. I don't change my thesis there. Let's go back. Let's go test the 2.8, grind higher, and then just squeeze. I can see that happening. I don't think there's any reason to be bearish at all until it starts to close below sort of 2.5. But for me, just going to go sideways higher. Oil, it's unbelievable. It's every time it goes back down here, it's just claws its way back. So, but you can't say it's bullish. It's not lower highs. It's the same level, but it's not lower lows, but it is lower highs. So maybe it's time to just be a bit more zoomed in about it and say, okay, look, when you're going to close below 67, and when you're going to close I don't know, can we do this? Well, yeah, when you're going to close above 74-ish, but maybe it's time to just draw a bit of a more zoomed in trend line. But for me, bias to the downside, unfortunately, despite this heroic attempt to keep it up here. Let's see. I mean, we can see the trend lines that it's trading between, but you can also see its lower highs, and it just keeps testing one, two, three. I really feel like it needs to flush and then have a healthy sort of hammer. It's just, where will that hammer be formed? Where will it close on the day? So a little bit weak oil, I must admit, despite the dollar being up. I mean, it is green, give it that, but still. Okay, uranium, beautiful stuff. So it breaks out a retest. You can see why it retests. It's retesting the descending. It doesn't have to be absolutely precise, and my line might not be absolutely precise, although it looks quite good. And it's retesting the horizontal breakout right over here, 21 point whatever 10. So broke out. You can even see we retested it here, and then again. So, but I give it more leeway. So even 20.8, just a general 21 zone. It is bouncing at 21. You can see it's a pretty engulfing candle today. Ventured higher than the last couple of trading days, and it'll probably close above yesterday's close. So that should signal a move back up to at least 22.5, if not 23. So nice bounce day for uranium. Let's look at gold and silver. Very interesting. I wanted gold to go to 1900 and flush. It did that. It went to 1892-ish. I thought we'd get to 1885-ish. It's the same thing. $7 is nothing when you're trading at basically 2000. So pretty much hit my level, and I must admit, a little bit bullish. This is a buy zone. I nibbled for the first time in a long time, because you have the dollar up. Yeah, I know. I also think the dollar might squeeze, but you have the dollar up and gold not down. We'll get to silver in a second. Silver, by the way, is outperforming. Look, it's also putting in a nice sort of double bottom. But the point is, gold is not exactly very red today. It's flushed. It's done what I wanted. It hit the target I wanted. It sort of went to the low. It went to 1890, 1885-ish. That's kind of one level for me. And it's not red when the dollar's green. So for me, time to nibble. If it goes lower, then it flushes and goes to 1860. That's the other zone. I mean, for me, it was between 1860 and 1885-ish. 1890 is the same as 1885. I think you understand what I mean by that. But if we flush, I'm not going to buy straight away. I'll just let it settle, see why. Maybe the dollar's squeezing. I'll give it some room because it can squeeze a lot. But otherwise, the next level for me is 1860-ish. It's the ceiling of this breakout, the banking crisis breakout. So, think about it. We ran very high. We kept on moving higher. There's a bit of exhaustion, and now we moved lower. So for me, it's not going to go all the way back down to here because it made new highs. So for me, this is a nibble zone, and that's what I did. Silver, yes, it's red, but not by much. And given the dollar's move and the interest rate moves, you've got to admit silver being down 0.4% is not that bad at all. It's also not even taken out its recent lows, so it's still outperforming gold, not today, but overall. And this is a sort of double bottom pattern, and it's a higher low. So not the most bearish move, given how bearish it's been recently. So I like silver. If we start to have a bit more of a flush in gold and silver, I'm going to give it room. And I think it gets very strong down here. It's not just sort of general support zone from here, the breakout, but also it should coincide with the ascending. So silver is going to have two strong technical levels. Well, it's one technical level for me, but for two different reasons, let's say, two different trend lines coinciding in the same point. Plus, gold will probably be at its level by then, around here. So for me, this is a nibble time. That's what I did. I nibbled, the usual suspects, Agnico Eagle, even Newmont, not Barrick Gold. What else was there? Pan American Silver, just the seniors. Because in case I'm wrong, even on the first and second level, I'm buying seniors, which will do very well. And then it's kind of a defensive play. You know, it's not aggressive. I didn't go into First Majestic or Curl Darlene and the usual mines I buy for aggressive moves up. So it's all pretty calculated. Okay, speaking of miners, let's look at the miners. Look at the miners. GDX now very strong engulfing. You know, that's a great bullish candle. So you could say the miners are outperforming the metals, definitely. I mean, silver's red, so having both miners green is good. Probably the market's helping them, but point is just above the level. So, and that's the point, you know, don't be too strict about your levels. You have to be a bit flexible. So I'm happy to have bought earlier in the day because now we're trading near high of day. Doesn't really matter what happens today. It's just a general move. But yeah, that's very engulfing. You know, if we close like this, it's just totally engulfing candle. Should go all the way back up to 30 and then probably go back up and test 31.5 or something. So GDX looks great. On the way down, you can see these two levels pretty much coinciding with the gold and silver levels, pretty much. And GDXJ, look at that. That one actually did hit my level pretty much perfectly and engulfing. So this is really bullish and it's outperforming the GDX. So, and that's with silver red. So GDXJ looks very good today. Very good. So let's see, you know, tomorrow, do we go test 35.8? Do we keep going up? Do we reclaim the ascending? Is it irrelevant by then? Let's see. But the miners are very good. They're outperforming the metals. The metals are good. They are performing despite interest rates and the dollar. And they've come down a lot, you know, and you can't say they don't have a very good fundamental macro thesis. So for me, bullish for the first time in a while, nibbling on seniors, so playing it defensively, but nonetheless bullish. So, okay, I hope that was useful. This is another intraday video. Yeah, and I just hope you appreciate it.